Ladies and gentlemen, good morning. It's very nice to welcome all you here in our offices in Warsaw. Thank you for taking the time to come here to listen to the Q1 presentation and the following discussion. Information for our internet viewers, as usual, we're sitting in Warsaw in front of Polish buy side and sell side. Please let me introduce you to our speakers, Mr. Marek Woszczyk, President and the CEO of the board, and Ms. Magdalena Bartoś, CFO.
Good morning.
My name is Jakub Freilich and I'm Head of Investor Relations. We'll deliver the presentation, which will be followed by Q&A session. As usual, internet viewers are invited to ask questions via email. And now I will hand over to Mr. Marek Woszczyk. Please, Mr. President, the floor is yours.
Thank you, Grupa. Hello, everybody, once again. So as always, we do, firstly, I will give you a short summary of the QA developments and update you with our investment progress, and Magda Bartoś, Group CFO, will lead you through our financials and operations at the end of our session. So as usual, we'll be ready to answer your questions. So firstly, highlights of Q1 of the current year. As you may see behind me, the PGE consolidated EBITDA amounted to over 2.2 billion zloty, and recurring EBITDA is not far from that because it is 2.1 billion zloty. So not too many one-off items we observed during the Q1. So our Q1 results that we've just published show an improvement of 500 million when we compare it to the last year reported EBITDA. We see that this good performance was achieved while exploiting improving year-on-year macro situation, which resulted in higher electricity prices as well as higher volumes generated. So stable performance of distribution business has always supported the bottom line of our financial results. Cash flows from operations reached 1.4 billion zloty and net profit to equity amounted to 1.1 billion, which may be translated to 59 groszy per share. Turning to our operating activity, our net generation in the first quarter of the current year amounted to a little bit more than 13.5 terawatt hours, which was 8% higher than in the same quarter of the last year. More favorable overhaul schedule of the lignite assets and high production in gas-fired CHPs after the support scheme has been restored had the largest impact on increased energy output. Distribution volume was higher by 2% than a year ago and stood at 8.41 terawatt hours. Sales to end users amounted to almost 10 terawatt hours and was pretty comparable to last year's results. Taking a closer look on the business environment, I may emphasize at first the macroeconomic situation, which is pretty decent, supportive. Not only economic growth translated into electricity consumption growth, but also macro forecasts are supportive to the trend looking forward. Secondly, from purely regulatory perspective, long-awaited renewable law was finally passed through the parliament, which in my personal opinion was one of the most important developments for the utilities recently. And thirdly, we have, as promised, we have updated our trading strategy. I mean not only document but operational activity, taking into consideration dynamic changes into the market. Our predominant strategy target is to maximize margin on the whole value chain. Of course, which is not surprising when you take into consideration the size and the position on the market of the PGE. but I promise that we will use a little bit more sophisticated tools than only margin and volume. Our new approach is not going to be based only on taking advantage, as I said, on our position, but we are also looking in a better risk management related to increased volatility of both electricity prices and the green certificates. Our supply offer is to expand both from the product and services perspective. Gradually we'll be entering the market with the new market offers, including, among others, the dual fuel. Further, auxiliary services are to be provided on top of the so-called old school energy supply. What I mean, energy audits, support in building micro networks, in particular demand management and some other type of auxiliary services that our customers might be interested in. In terms of the customer service itself, we are looking into providing our customers with best-in-class service, both from the account management perspective and hands-on support. Of course, that requires better and more timely consumer relations to meet their needs and the shifting demands. That is a more comprehensive and broader picture perspective of what we'll be providing in the coming quarters, bringing on the updated trading strategy on board. Coming to, as I mentioned, the macroeconomic impact. As I said, the Polish economy continues its sound growth. Forecasted Q1 GDP upside of 3.4% led to solid increase in electricity demand, relatively solid, I mean 1.3%, reaching close to 42 terawatt hours of consumption. So having experienced forward market prices slight decline in the first month of this year, we see a number of drivers behind it. Firstly, renewables generation was higher due to extremely good weather conditions, and we believe it impacted the spot prices during the Q1, as well as the prices of ongoing forward contracts. Secondly, ORM, in English, Capacity Reserve Mechanism budget. It was introduced or amended solution introduced by the regulator since the beginning of this year, which created some uncertainties among the utilities how it will work. When you add to it very healthy supply in a conventional generation during the Q1, it has its implications on relatively flat formation of the spot prices and in consequence forward contracts. Thirdly, hard coal prices were falling a little bit during the Q1. So these three main factors are of significant importance, in my opinion. However, they have rather temporary impact on the market. Some of them partially are to be phased out. So we also witnessed a change in the cross-border flows as a result of the shifting price relation between Poland and the neighboring countries, especially Germany. It gives us a clear picture that we are not, say, doomed to be an electricity importer only in the future. Polish utilities are already able to provide competitive prices at certain times, exporting power, and we should be able to take advantage of such circumstances in the future. The last chart behind me demonstrates some imperfections of the renewable generation sources that are not being able to to supply or to provide the stability of the supply, even despite of the subsidies. It highlights why we should take care of the baseload generation capacity in Poland, and as a PGE we keep seeking opportunities from that angle. In terms of our flagship investment projects, all is on track, I could say in brief. In terms of Opole, the whole progress of the works at the Opole project is currently at 11% of completion level. Construction site that I have visited personally last week is really impressive. You may watch it through the streamlined video. We continue to build the foundations of the main buildings and the basic equipment, as well as construct the communications pillars for the boiler number 5. What's more important, all works are in line with the adopted schedule and the budget. In terms of the Turów project, all early stage projects works are in progress, basic engineering and our key project documentation is almost completed. So Turów construction site is ready for start of the civil works. I mean first excavation and demolition of the existing foundations of old cooling towers. As far as our CHP project in Gorzów is concerned, it is at a pretty well advanced stage. The main equipment such as turbines and generators are delivered, have been supplied to the construction site, so we continue the assembly of the steel structure of the main building. When we go to the other types of the investment, non-flagship projects, so we continue modernizing our conventional fleet. In the first quarter of this year, we initiated a tender for refurbishment of units number 1, 2, 3 in Turów. Modernization of unit 11 and 12 in Bełchatów has been almost completed. Here I would emphasize that it's not only operational efficiency we achieve, but it contributes to the protection of environment as well. We said it in our strategy and we keep sticking to it that PGE strives to be an environmentally responsible company. We've done so much to reduce our emissions in the past, and we still keep doing this. On the distribution field, the first quarter of the current year brought the conclusion of the joint tender for the supply of the balancing meters for 4 distribution system operators in Poland, including our distribution system operator, PGE Dystrybucja. We have contracted more than 9,000 of balancing meters. So joint tender provided not also some savings on our side and the whole DSOs, but ameliorated cooperation between the DSOs. We're also progressing with the modernizations of our grid and the time to connect the client to the grid. Most of works usually intensify in the second and the third quarter of the year because of the weather conditions. We will keep you informed about that. In terms of our wind farms, the construction of our wind farms is on time and on budget. We've assembled first towers and installed first wind turbines in Karwice project. Another 3 projects, I mean Lotnisko, Resko 2 and Kisielice 2 are also progressing with the objective to be completed by the end of this year and to start generating the first megawatts. Renewable law. As far as I am concerned, as I said, this is one of the most important issues and a sort of a game changer for the whole energy sector in Poland in the first quarter and for the near future. And for sure, we will have to adapt to the new
renewable support schemes as proposed by the government, despite of the fact that currently the Ministry of the Economy is trying to submit to the Parliament the amendment to the brand new law. The new law, as you know, changes the support scheme for new renewable installations based on auctioning system post 2015. However, the existing installations are enabled to stay in the previous support system for maximum 15 years after having been commissioned. That's why we concentrate on our flagship wind farm investment projects to deliver them by the end of this year. The adopted law constitutes a great national task and requires the whole sector to adapt to the new regulations. PGE is also carefully analyzing current and planned projects as well as prospects for the development of our renewable fleet to ensure effective use of our resources for future value creation. So I do believe the law is able to ensure that we meet EU goals with the costs that are not overburdening the Polish economy and all power consumers. It is important to emphasize that Poland is not a country having a vast renewable sources at disposal. We have some geographical handicap that causes that we have to seek our own way to become more green, probably exploring further the potential of the biomass. And that's it from my side. Now we'll pass the floor, we'll give the floor to the Magda that will walk you through the operational and financial result of the Q1.
Thank you, Marek. Thank you, Marek, and hello everyone again. Good to have you here with us with this next interim release. Firstly, first quarter of 2015 was in line with the guidelines we provided you with for the full year. A number of drivers impacted our results, of which increased realized wholesale electricity price and sound operational performance were key. We will go through the details later on in the presentation. Revenues for the 3 months of 2015 came at 7.6 billion, up 9%, notably due to higher realized electricity price mentioned, that was higher by 12 zloty per megawatt hour. PGE recorded first quarter EBITDA of 2.2 billion, a rise of 1/3. On a comparable basis, EBITDA grew by 9%. That is in line with the revenues growth. The additional 500 million Polish zloty of EBITDA came strong in terms of cash flows and translated into a corresponding cash add-on. It is typically so in the first quarter that cash flows from operations are lower than reported EBITDA, and that is reflecting a payoff of the large volumes of liabilities recorded in the fourth quarter. That was also the case for the first quarter of 2015. CapEx was up by 40% and in volumes came close to cash flows from operations. PGE maintains its strong liquidity position. At the end of March, we recorded almost 5 billion of cash on our accounts. That is enough to cover our financing needs for the coming quarters. But I believe a noticeable change on our balance sheet that is also important to mention here is that we turned around our balance sheet from a net cash position to a net debt position as of the end of the first quarter. When it comes to operations, our generation volumes came strong in the first quarter with 14.53 terawatt-hours of output, up by 8%. Volumes generated from lignite constitute almost 70% of our production in the first quarter. That is thanks to the lighter overhaul schedules, especially in our Bełchatów plant. Second largest generation technology, which is hard coal-fired power plants, noted a drop of 6% in output. penalized by the impact of an outage of a power unit and also lower utilization of assets as driven by the TSO. Gas generation was significantly higher. These results were made possible with the reintroduction of cogeneration support in Rzeszów and Lublin plants. Renewables production grew both in wind and hydro production, supported by favorable weather conditions. Weather, as opposed to last year, first quarter, was supporting the renewables production by large. Operating performance, as we mentioned, drove the results for the first quarter. Availability of all our generation assets was higher than last year. In particular, our hard coal assets improved thanks to Dolna Odra higher availability. We noted almost 1,900 hours less of repairs and overhauls that did not immediately translate into higher load factors and utilization as the units were kept idle by the TSO. Our lignite-fired plants availability grew by almost 5 points, and that immediately transported into higher utilization and higher profitability of those assets as they operate on fixed cost base. With our continued focus on the reliability of grid performance, we noted another quarter of improving operations. SAIDI was cut by 1/3 to 108 minutes. That was supported with our investment focused on grid reliability, but also supported with favorable weather conditions. We did not have as many of the outages of grid as in 2014 with some catastrophic outages. Network losses are kept low and improve on our distribution business bottom line. Let's discuss the key drivers behind our EBITDA change for the quarter. Higher realized wholesale electricity price was a key factor supporting our earnings growth. Almost 160 million of additional EBITDA, and the blended realized price of wholesale was up by 12 zloty per megawatt hour. Production volumes higher by 1 terawatt hour delivered roughly 60 million of additional EBITDA, with a large portion of that growth coming from fixed cost based plants, lignite-fired plants, as we discussed. Less output on hard coal allowed for a saving of 36 million on fuel costs. In the first quarter, we saw that CO2 prices appreciate, that together with higher production volumes and lower allowances, CO2 allowances, drove the results down with almost 60 million. Renewables and cogeneration support was a burden to our EBITDA change. Additional cost recorded to renewables support and cogeneration support was 28 and 15 million respectively. Distribution delivered sound performance with additional 40 million of EBITDA. Let's discuss the performance of our business lines. And as we at PGE strive to deliver your best-in-class financial reporting, one important change to our segments reporting, we decided for some changes in the reporting of our segments. Conventional generation business line now consolidates also the subsidiaries in the group that provide auxiliary services to the conventional generation, previously reported in others business line. Also, supply business line, supply segment right now consolidates the previously reported wholesale and retail business lines, as we believe this will add to the relevance of reported numbers and also reflect the business decision-making at PGE. It is worth stressing that all of the PGE business lines delivered growth delivered growth on the comparable EBITDA. As discussed earlier, our organic EBITDA growth was 9% of the total. 60% came from generation. In particular, conventional generation stood up with a sound double-digit EBITDA growth. 30% of our business came from regulated services. Conventional generation business recorded EBITDA of 1.1 billion, an increase of 14%, resulting from higher wholesale electricity prices, improved operations. That was partly hampered with the increased CO2 burden and gas costs, as we discussed. That gas cogeneration support was reintroduced, and we also reintroduced production on the gas-fired units. EBITDA from renewables came flat and contributed 125 million to our total results. Supportive weather conditions and higher volumes generated were largely offset by a decrease in prices of the so-called green certificates. The price drop of the green certificates was roughly 30 zloty. EBITDA from networks rose 5% to 627 million as a result of investments and efficiency measures. Volumes distributed grew by 2%, as Marek mentioned. That is 0.2 terawatt hours. That also allowed for increased revenues and translated into the bottom line growth. In Q1, PGE continued to deliver against our strategy and our strategic investments as well. Our capex came at 1.4 billion, up 40%, and the growth is largely due to spendings on our flagship project in Opole that consumed 462 million of capex. 2015 will be another year when we continue to refurbish our existing asset base, our existing asset portfolio. In Q1, we continued with the modernizations in Bełchatów, as we presented, that consumed 164 million. We also kicked off preparations for the modernizations in the Turów plant. We will be seeing capex adding up to the total volumes in the coming quarters. In networks and renewables, a number of projects are consuming cash flows. Roughly 25% of our capex spendings in the first quarter came to the renewables and distributions, putting foundations for returns and stable cash flows and lower risk profile of the group in the coming quarters and years. PGE's performance for Q1, as I mentioned before, was in line with anticipated outcomes as we communicated with the previous presentations. With today's interim release, we are also updating our outlook and confirming our guidelines for the full fiscal. We continue to expect our conventional generation business grow on comparable basis, thanks to a number of drivers, out of which increased wholesale electricity price has the largest impact. Our continued focus on supply performance gets supported with the lower cost of renewables support regime, and that will also contribute to a growth in the supply business line. Distribution and renewables outlooks remain unchanged, and we expect these businesses to deliver flat results as compared to last year. With investments in full swing, we continue to expect our capex grow on comparable basis as to last year and deliver some significant spendings and increases of our asset base. That concludes my presentations. I hand over to Kuba, and I suggest we go straight into the Q&A session.
Well, we'll hand over to you, basically. I will give you the floor to ask the question first. For the sake of us, of answering the questions and internet viewers to follow them more easily, please don't exceed 2 questions. Follow-ups are always welcome, but that's very difficult to follow otherwise.
Hello, this is like a common question, what is your hedging for 2016 in terms of volumes, in terms of prices? And additional question would be on that subject, do you continue hedging policy today at current prices?
As Marek informed you in the presentation, our trading strategy is being or has been updated, but the one thing remains unchanged, that we rather keep it confidential. And as with the previous quarters, we are not releasing the volumes of our hedging for the coming years, as we are simply the largest player in the market, and we do not want to distort the market with the information released. So I suggest we follow up with the next quarter releases with our guidelines and outlooks, but we cannot transparently answer to the question.
From a different angle, do you see any... 1, 2, 3. Do you see any, line and the price below, electricity price below which you would not hedge?
Theoretical question. What we may say is that, primarily we're trying to concentrate to maximize the margin, but at the whole value chain. That's not a surprising probably for you. But in the past, the situation looked like that the PGE has treated each element of the value chain separately, a little bit separately. This led us where it led us, okay? And we see that in the changing market circumstances, the market is much more demanding today than it was in the past, no doubt. We have to treat our whole value chain, looking at once and the whole elements and taking them together into consideration, how we profit on our generation fleet and secure our supply, when to produce, when not to produce, etc., etc. That's what we're trying to say when we're talking about our new trading strategy. This is not only about basically, looking at the retail side and deciding whether we will go with the business with a concrete customer or not. This is also looking at our assets on the generation side, whether we should or not to maximize our production, depending on the concrete daily market conditions. That's why I mentioned that management risk policy that we are introducing together with the new trading strategy. But sorry, I cannot disclose more on that. So I think I tried to answer your question as far as it is possible on a legal basis.
Thank you. And different issues. Your thermal coal purchasing price fell 3% in the first quarter, year on year. Do you expect? You mentioned mid-single-digit decline. Do you expect higher decline in price of thermal coal in quarters 2, 3, and 4, or 3% from the first quarter would be an appropriate guess for the full year? And the other question, the renewable auction is slowly coming, and what would be the total amount, total capacity presented by you in 2016 auction?
When it comes to thermal coal purchases, we give you a guideline of a mid-single-digit percentage change, which we estimate to be in the range of 5%. We expect some smaller declines of those prices in the coming quarters.
In terms of the renewable auctioning system, yes, we are preparing ourselves to take part of the first auction. Today is too premature. It would be too premature to say how big the volume is to be offered by us during that auction, or offered, bid, actually.
Can we state today it would be 100 or 500 megawatts? Yes. Please give us a rough number and we would elaborate more.
Okay, closer to 100. Closer to 100 than 500, okay?
Thank you very much.
I'm sorry. Piotr Dzięciołowski from Citibank. Today there was an interview with Mr. Sędzikowski in Pulse Biznesu. He's looking for 2 billion zloty to capitalize new Kompania Węglowa. What would make you invest in this company? How do you see this opportunity in the market? That would be the first question. And second question, I wanted to ask you about your projections for power prices. At the time when you started Opole project, you were trying to convince all of us that power prices are going to 200 zloty in 2020. How does it compare to the current power prices and the trend we see over last quarter? And what is the current situation changing your expectations?
In terms of second of your questions, the power price is a very important element, but not the only one you take into consideration the overall profitability of the investment. This is also about the other costs, like the costs of the fuel, for example, right? I've mentioned that they were declining a little bit during the first quarter. But generally speaking, I also gave you my opinion on what happened with the price formation during the Q1. And I am treating this personally as a temporary effect. This will not continue any longer, and we'll still keep to our strategic assumptions of the slow growth. 2020 is still far ahead of us, and we believe that it is achievable in the real terms to have 200. But as I said, you shouldn't treat that 200 as a god, because the other elements of the whole profitability analysis has to be taken into consideration, namely the cost of the fuel and other costs. Okay, as I said, with these investments, the advancement is at 11% today, online and on budget, but I am very far from saying today that we will, not be able to save some money within that project. I mean, the overall capex expenditures. So this will also have an impact on general profitability level of this investment. So we still stay cool about the Opole. In terms of the first question, well, you're asking me to comment some of the paper statements of the.
I'm asking you about expressing PGE management position regarding current coal market situation and the need to rescue Kompania Węglowa.
As you know very well, because I said it very, very often, that we are, as a PGE, engaged in the coal market somehow, because we consume 7 million tons a year of the hard coal. We have a very good so far and long-term business relations with Kompania Węglowa, as the others coal mining companies. And as a board, we are analyzing any possible scenarios in the future, because we are interested in having, long-term stable supplies of the hard coal of the proper quality and the time. That's why, yes, we watch at the situation. This is not healthy situation of the company. I think everybody knows that. But what I may say, just to assure the investors that the board will consider any. In our analysis, we are trying to think in our future of the relations with the coal sector in such a manner that will bring more value to the investors, not deteriorate the value. So we are committed to provide for the stable dividend policy, and not to diminish that, not to deteriorate that. So you pose me a very difficult position to comment that article in the newspaper. So I think I said what I had to say, and that we are analyzing any such scenarios that will not be deteriorated for a company. On the other hand, and on the other aspect, we'll have to secure the long-term supplies of the hard coal of the required quality and competitive prices to our generation fleet, especially I take into consideration the Opole, which is pretty new, and in a couple of years it will be operational, consuming another 4 million of tons of the hard coal per year. It needs a stable supplier or supplies of the coal. That's it.
Thank you very much.
Michał Kuzowicki from JP Morgan. Just one follow-up question on the power price. In a scenario where the current power price trend is unchanged, and the power prices don't rebound from current levels or continue to drip lower due to the reasons you described, do you think it's reasonable to expect that the ORM system, or the capacity reserve system, would become more generous again in 2016, so like a comeback to what was the case in 2014?
It's reasonable to expect that, because we are in a constant dialogue with the regulator and with the PSC, transmission system operator, on how the existing amended capacity reserve mechanism is working. That's one element. I wouldn't be too much surprised if some new corrections are to be brought on the table by the end of this year to this mechanism. We'll see. This is the first element. The second element, I would like to draw your attention on what, in my opinion, will happen. The stability reserve mechanism concerning the CO2 prices, generally the element of ETS2. Probably that mechanism is to be introduced at 2011 and not at 2021 as was promised. When you read today's newspapers, then you will know that almost the agreement of the EU member states under the Lithuanian presidency is almost reached, and in June or July, the final decision of the European Council and the European Parliament is to be made on that. It means that probably the slightly higher pressure on the CO2 allowances price, will be maintained, when we may expect a slight, this is just my personal opinion, we may expect a slight increase on that, but we will see. The market is difficult to predict still on that. So I think those two elements should be taken into consideration, answering to your question. And the third element, this is the balance of the capacity offered versus capacity needed by the market in the time after 2020. So it doesn't change. Generally, the situation is a little bit easier today, but in general terms, Poland still have to resolve the issue of very tight situation in terms of the capacity in the future, in terms of the future capacity delivered to the system versus demand coming from the market. So because of such directives, environmental regulations like EID, for example, like BREF-BAT, probably another set of the units, of the conventional units, including CHPs, will have to be or modernized or to phase out. It will create another pressure on the new investments to deliver the firm capacity to the market, but earlier market should react with the higher expectations of the prices, with the expecting higher prices, sorry. So those three elements should be taken into consideration. We take them into consideration when we look at the forward price formation in Poland. So that's why I'm still saying that what we planned is reasonable in terms of the price formation in the near future. Does it answer your question or not? Because I try to know to find out the sense of the question.
Krzysztof Kubiszewski-Trygo. The first question is, how advanced is your 1 billion zloty sustainable cost-saving program? That's the first question. The second, are there any talks on WACC formula rearrangement from 2016 to basically improve the return?
With the efficiency improvement programs that were largely focused on our conventional generation business line and distribution business line, as we reported, we are currently delivering against the voluntary leave program that was provided for in the fourth quarter of 2014. We will be reporting you with the progress once the program and the leaves get the required volumes, so that we also report the walk we talk. And with the efficiency improvements that were also accounted in the 1 billion sustainable EBIT improvement, we are on track with Bełchatów modernizations, and we will be kicking off Turów modernizations that also contribute to those efficiency improvements. With the operational improvements in the distribution business line, we are on track with the side factors and network losses as reported in today's presentation. With the change of the formula of the tariff calculation for the distribution business line, please note that we also amended this quarter's presentation and provided you with some more of the key performance indicators in our distribution business line that corresponds to the change being discussed in the tariff model. So a focus on SIDE, so interruption durations, on interruption frequency, connection times, and network losses. From now on, we will be updating you regularly on those key performance indicators so that you can also link it with the new methodology of tariff calculation. Would you like to add anything, Matt?
Thanks. We have one more question on the supply segment. What was the effect of lower green certificate cost quarter on quarter?
Green certificates dropped prices is a market effect. So we observed we are buying those certificates largely in the market, not only producing ourselves, but largely buying in the market as we are short with green certificates. and those prices were observed lower than in the last year.
Tomasz Krukowski, Deutsche Bank. One follow-up question on distribution segment. Do you think that this new formula will improve or spoil your profitability in this business line?
It should be rather neutral. It's not, I said it many times, because, the ongoing talks with the regulator are promising in that sense that, the initial assumptions are not changing in terms of its impact on the impact of the new model of profitability of the distribution business. So, of course, we cannot know and can guarantee the final decision of the regulator, but we act in a goodwill, and we do not expect it to have, strongly deteriorative or strongly supportive effects on our model, because this is not a general principle assumption of introduction of the new model. The general assumption is to bring about the more efficiency in the distribution segment, as Magda has said.
Which is perfectly in line with our strategic focus as well. So
we don't see any negative impact from the model itself on the income and profitability of our distribution segment.
One more question on dividend for last year. Have you made any decision what's going to be the final payout?
The board has not made any final decision in terms of the figures, but we will stay within the dividend policy. It has not changed, and it will not be changed.
Can I ask one follow-up question? Is Energa acquisition off the agenda, or that's still on your mind, something you'd like to do? And is recent management change at Energa making it easier in your view or harder?
This is a matter of the, let's say, leading shareholder of both companies, and I'm not going to, comment on the personal decisions of the supervisory board of this given company, but I'm pretty convinced that you know my opinion about that transaction, because I said it explicitly during the presentation of the last year results. It has not changed. I mean, my opinion has not changed on that.
From Trigon. I just wanted to come back to the strategy that you released about 1 year ago. There was few assumptions about the electricity price, and in case of what we've got today, I mean 160 zloty per megawatt hour for 2016, and your assumption, I mean much higher. Is it possible that in case that at the end of the year the prices would be at the same level as right now, you will be forced to change your strategy and change your EBITDA forecast for less optimistic?
Well, we are not the wizards of the future, but if the economic, especially microeconomic environment will change, that every board should take, in my opinion, a decision, or at least to analyze the necessity of such a decision to adjust this company's strategy. But today we are not analyzing
such a scenario. We are not elaborating on adjustment of our strategy. We stick to it. We stick to what we've published. So I'm trying to feel the core of the essence of your question, because I will not hide, it's a little bit surprising to me. Of course, everything may happen, and nobody knows what will happen by the end of the year. But so far, we are in line with our original assumptions, and reasonable elements of the microeconomic ambience say to us that we shouldn't change. There is no reason to change our strategy today.
So differently, if I could ask, the assumption about the electricity price for 2016 was above 180 or lower, or about the level?
I believe we should rather extend your question. So the electricity price is not the only driver of our results. And as we've been discussing with Opole assumptions and the previously asked question of 200 zloty in 2020, it is the spread that matters, assessing the profitability of our generation assets. And with the 2016 macroeconomics and electricity prices and any potential need of adjusting our strategic moves, strategic priorities, or even guidance, we obviously are observing what is happening in the market. We do have our views on evolution of those. And as Marek was informing you, we treat it rather as a temporary effect of several key drivers, and we expect the prices to pick up in the future.
Okay, maybe we'll turn a little bit to our internet viewers. We have a question from Roland Fetter from CF Partners. Is the good performance of generation segment in terms of volumes a good indicator for the full year, or it's not?
As with the guidelines we published and updated in our presentation, we do not expect any bad surprises when it comes to the availability of our lignite assets. Our investments in the modernizations are paying off with high availability and higher load factors, thus providing for higher volumes of production. Regular outages and planned, or maybe not regular, planned outages are on our schedule and will be delivered throughout the year, but we do not expect any significant change to the observed trends of volumes in production.
Okay, thank you. For this part of the internet questions will be done. Most of the questions were already answered through the Q&A session. If you don't have any follow-ups or extra questions, we'll be wrapping up. So thank you very much for visiting us today here, and see you in August for the half-year results.
Thank you, everyone.